Welcome to episode 5 of the Wall Street's Bets Bonanza. We have 4 other videos explaining all sorts of technicalities of what exactly is going on. But today I want to bring you a little bit something more specific, which is identifying the misinformation among the masses. A lot of them have good sentiment, they're in the right direction, but they're just not accurate. I also want to explain my position given the current scene, how we've got a lot of losses recently. Do we keep holding? What's the status? What's going on here, right? And how much do we really even know? I love going to Reddit and just checking out the Reddit DD flare because some of these bits are gems, right? It's just trying to figure out which ones aren't and which ones are, right? I'm also in lots of Discords and people are sending me information all the time like, hey Teddy, what do you think of this? Is this accurate? Is this good? Is this bad? Is this bullshit? And a lot of it is. So let's just start with a couple of them. So I actually just double checked and apparently that tweet has been deleted. So maybe they got bitched out enough for it, but I think it's important enough to share this because I've seen it even on my Discord. Some people mentioning that there's this idea that something is closing and that Wednesday is the final day. And I went over this in a video and right here, and I even linked to the exact time of where I talk about this, but there's some things closing and some things that are not closing. Again, options close, shorts do not. Shorts can last literally forever if you have the capital. So there's nothing closing on a certain day. So here we see it's like closing Monday, closing Tuesday, closing Wednesday. And this is based off this idea of days to cover or something. Well, first off, the days to cover is not what you think it is. Okay, so let's first explain what days to cover is. Days to cover, you take how much short interest there exists, divide it by the volume of the day. And so if you have an insanely high volume, which we are seeing now due to the market manipulation, then volume-based metrics are not going to be reliable. Second of all, days to cover is just simply a hypothetical number that says, based off of how much short interest exists, this is how many days it would take for all those short positions to be covered. So it doesn't mean that they have to cover in this amount of time. It just means if they wanted to, how long would it take? I think it's actually a 10-day average. 44.6 divided by that is 0.6, meaning if you took all the volume of the day, it would only take 60% of the total volume in order for those short sales to be covered. Now, obviously, people are going to be like, oh, well, is that what happened? No, of course not. Never in history is there been a day where every bit of volume has covered shorts, right? So I just want to clear that up first of all. There is nothing happening tomorrow that is special, right? Absolutely nothing. There was a special thing happening on Tuesday, which is options closing. That was the last day by SEC regulations, because you have 2 days to close your positions, that people could have bought the shares to cover their options that they had that have already executed on Friday. More options are going to be executing on this Friday, which means they'll have until next week, Tuesday, to cover those, and so on and so on. But these are things that are almost relevant because those options will likely have price already factored in. So like I said in my previous videos, this is an unknown time duration. The short squeeze in VW that lasted a month, this could also last quite some time. Now, did I expect to see the drop that we saw today? But given the fact of this institutional short ladder attacks, which if you don't know what short ladder attacks are, just go ahead and Google it. There's about 1 billion videos explaining what they are right now because it's very, very popular at the moment. Given the short ladder attacks, it seems like this is very much possible that we would go down this far. There's also people who've given explanations about that because it's such low volume and such a drastic price change, it's almost certain that it is a short ladder attack. It's not certain, but of course this is like best guess. Hi, I'm over here now. Another thing I want to talk about is the daily short sale volume. Now, people are thinking that volume means quantity of short. This is not true, okay? Volume just means how much is traded back and forth. Take, for example, I give you an apple for $1. Then you give me that same apple back and I pay you $1. And then I give it back to you for $1. And then you give it back to me for $1. The volume of the day is $4, but nothing has changed, right? I still have that same apple at the end of the day. Similarly, you're going to see a lot of short positions being transferred to hands. In fact, in a short ladder attack, that's exactly what they're doing, right? They're just changing from I own the short to you own the short to I own the short to you own the short. And there's nothing actually happening at the end of the day. So don't be confused when you see these short volume statistics. It does not mean short interest. Short interest is the actual complete total number of shorts that are out there in the market, and that number wouldn't change if we're exchanging hands. But volume may be inflated due to the short ladder attacks, due to market manipulation, and just due to the inherent volatility of the stock. Like I said in previous video, FINRA members have to report their short interest volume twice every month. How many stocks have you sold short? Again, we get this data every 15 days. So the next time that we're going to figure this out is coming up. It's very likely they reported on the 29th, as they should have, and February 2nd is the due date, and then exchange receipt date is February 29th. So I'm not exactly sure when this data gets released. We might be seeing it tomorrow. That actually might be huge. Actually, that's something I want to figure out right now. Okay, we figured it out. So NASDAQ short interest is available by issue for a rolling 12 months and updated twice a month. We knew this. Short interest data is based on a mid-month and end-of-month settlement dates. We knew that. And released after 4 p.m. Eastern time on the dissemination date. So looking at their schedule here, the dissemination date of the next reporting settlement of 129 is the 9th of this month. So we're going to have to wait a couple of days before we get this information. And it's going to be like a 10-day lag, which is pretty sad. So it's not going to be as big a deal as I thought, but still keep your eyes peeled for this one. Now, keep in mind also, though, that they can fuck with us and they can report wrong numbers and then submit for audit later. Still, I think it's going to be majorly accurate and we should be on the lookout for this. So keep your eyes peeled. Likely you'll see this number being updated on Yahoo Finance and we will get a good percentage or a good idea of how many shares are actually on float. That is a big deal. That is a big deal. So there's another post I saw actually on Reddit. So realize that the short percent on float is what's really matters here, not the short percent of outstanding. Outstanding just means how many shares completely exist, but a lot of those shares are locked up. Like when you have employee offerings of stock, you can't sell those, right? They're already designated, so it doesn't matter. We don't care about those. They can't go into the open market. We only care about short percent of float. So if you see a DD basically claiming that the AMC short interest is actually 10 to 15% based off of their calculation, in this article, they calculated the percent over full outstanding shares, right? They said total shares outstanding, and then they put the ratio over that, which is calculated into a 10.5% short interest. In this, I actually commented and I said, I think something important to notice, which I just told you guys. In a short squeeze, the only thing that matters is percent short divided by float. So the minimum, even conservatively looking at this, given the fact that yes, we saw some converted shares from bonds, which is in the amount of nearly 50 million, and we also saw AMC sell some shares. I'm not sure if those are already included in the float or not. That's an information that I don't have, but could find out. Maybe I'll figure that out on the Discord later. But it looks like even if they were not included, like minimum, in my opinion, 25% short float. Again, we're going to find out like real soon what it was at least 2 days ago. And so that's going to be really good information to have. But just keep that in mind. We don't care about the percent short over fleet outstanding shares. We care about the short percent over float specifically. So obviously not all of them are bad, right? Some of them are fantastic. And this is one that I found absolutely phenomenally interesting. This guy basically has this chart here that shows the total position cost distribution. Now, what this means is that you have a certain number of people, which is this direction, and then you have the price point at which they own the share. So that means this many people bought at this price and are holding on at that price. Now, how you get this data, I don't know. So this is actually one of the biggest problems. I'm not sure the source of this. This was from Webull, but I don't know how they got their data. But assuming this is accurate, which, you know, take it with a grain of salt, because there's a lot of things that people hypothesize that are not actually 100% accurate. But what we see here is that basically everyone held their position, yet somehow we've increased the holder of between like $90 and $137. We've just added shares. The only way you can add shares is by continually shorting uncovered shorts, right? Which is again illegal. Keep in mind, these companies will do anything to not pay the billions of dollars that they owe. The fact that it's illegal is irrelevant because the fines that you get are tiny in comparison to what their potential losses are. There's another thing that happened, which was SSR came into effect. And SSR is this short sale rule. It basically implies that you cannot short a stock on a down tick. What this does is help prevent short ladder attacks because you can't continually drop the price. You can only buy when the stock price goes up. Now, that being said, there's still a lot of manipulation that can happen even if you're following the rules. When you look at how this rule is enforced, it's self-regulated, meaning there's no way in hell these companies care about NASDAQ implementing a short sale rule. They just don't care. So they're going to do it anyway. So just because it's on the list, don't think that short ladder attacks can't happen. They absolutely can. They absolutely will. It's like if you offer me $1 million to speed, then of course I'm going to do it even if I get $100 ticket. right? I don't care about the $100. I'm about to make $1 million. It's the same situation here. The fines do not outweigh the potential loss. So don't be fooled when you think that, oh, because it's on a short sale rule list, which both AMC and GME are, because they both dropped 10% from previous close, it's still going to happen. Still expect it and don't rule it out. Another thing I want to talk about is this silver thing. Now, I think most people know at this point that it's total bullshit, and it is. Sadly, it did get quite a few people, but I think those people have now sold off, and silver is no longer a thing. I don't know if it was pushed by somebody who just doesn't know what they're talking about, or if it was actually pushed by the hedge funds to try to distract people from buying GME and AMC and these various other stocks, but silver has absolutely zero squeeze potential. Now, there are other stocks that actually do have squeeze potential. Like if you look at space, their float on loan is actually pretty high, right? It's 25% according to this. That's definitely squeezable. The problem is it takes a lot of effort to squeeze a stock. In order to squeeze, you have to buy out all the shares that exist, or at least everyone who's willing to sell. You have to buy those out because otherwise the short sellers are going to cover their position. And so it takes a lot of capital, like a lot of capital. To do this on something that has a market cap of 11 billion, or for example with silver, where the market cap was, again, 16 billion. It's just not as feasible as something like GameStop, which started at under a 2 billion valuation. So when we split up all of our funds, it becomes really hard to squeeze these things because there's just going to be too many additional floating shares on the market that aren't going to be focused in the attack. So although I appreciate people bringing up space or even naked, which also had squeeze potential according to the chart that we put together with 80 plus collaborators. You can see according to this, short float is still like near 42%. SKT also 51. Naked was 23, still pretty high. Obviously Nokia, I covered this in my first video, Nokia and BlackBerry, not even close. We as retail investors do not have much capital. We really need to focus. And I think 2 is already enough. So please don't be distracted by all these other opportunities. Okay, I don't have access to this website, but regardless, you can see the title here, AMC Entertainment stock now a sell at MKM as analyst price target drops to $1. $1? How is that even possible? $1. Looking at just the fundamentals here, AMC before COVID generated $2 billion in the year. Right now, according to the stock, they're worth that much. To have a PE ratio of 1, obviously things changed after COVID, of course, but having a PE ratio of 1 is insane. In fact, talking about deep value, this is what deep value would look like. This is a hold stock now, let alone a squeeze, right? This thing could last and you're almost guaranteed to get your money back at such a low PE ratio, assuming you don't think AMC would just collapse after everyone gets out of COVID, which I do not. Their property alone is worth a significant portion of this market cap. I mean, they're fucking everywhere. So this is just some more misinformation that's being spread to try to convince people to get rid of their stock. And it's, hardcore tactics. You got to be ready for that in this hardcore game. Man, that sounded ridiculous. So anyway, where am I in this? What am I doing now? Because I'm sure people want to hear. Again, I recommend knowing your exit strategy. Exit strategy doesn't mean you sell right now, right? I started posting in Discord and got a lot of shit for saying, hey, plan out your exit strategy. Exit strategy, we're going to hold forever. You can't hold forever, then you make no money. You don't want to hold a piece of paper forever. It makes no sense. You eventually need to cash it out. So how does that work? Please look at my other video, the one right before this. I think it's the 4th one in the series that talks about sell to limit spreads. That'll help you create a very good exit strategy and make sure that you at least get some money back. Me personally, though, I have actually shifted to liking GameStop more now. Why? This basically comes down to something like, I don't know if you guys play a lot of poker, but something called pot odds. Now, pot odds essentially say if the pot is worth $100 and it only takes me $10 to try to get a chance at it, that's pretty good, right? Whereas if the pot costs $10 and I have to put $10 to get a chance at it, that's not so good. I better have a really good hand in that case. This is the same kind of situation. Right now, GameStop is really cheap. It was 500 not 2 days ago or 3 days ago, right? At this point, it's now 100. So the growth potential is significant. Whereas Amazon before, I was thinking, okay, higher risk, but higher reward. Now it seems like GameStop, less risk, but still equal reward. I think this has the potential to grow by 10x. I think AMC has potential to grow by 10x, but GME has a much more likelihood of actually doing it because there's more institutional investors involved, there's more capital in GameStop, and it's just kind of already proven because it did spike once, right? So although I keep both, and I actually still have more AMC than I do GME, I did recently put a additional position into GME at $90. A lot of people have actually asked me, what do you suggest for broker? I currently suggest TD Ameritrade or Webull. I have not tried Webull, but it seems like it's going really well for people. I have tried TD Ameritrade. My partner uses it and it's been fantastic. It has no problems and you can trade 24 hours a day and the orders that you can set up are top notch. It's a very good, it seems like a quality broker. Please do watch previous videos if you're still confused about what's going on, why it's happening, how long it'll take. There's a lot of information in those, and we're going to continue to cover this for the next couple days because I think it's still going to be here for the next couple days, especially when short interest numbers drop. When those drop, we're going to have a lot of information to go off of, and we're going to be adjusting quickly. The stock is going to adjust quickly, and you got to be ready for that. Now, I've said this a million times already, but I'm going to say it again. Only gamble with what you can lose. Okay, someone came in my Discord today and said, I'm betting my rent on this. I said, you better fucking not bet your rent on this because this is not a safe bet, right? We'll have more videos later about safe investing, value investing, long-term investing, stuff that I have the mass majority of my portfolio in, right? I have a very, very small percentage, not even 10% of my portfolio is invested in this stuff. Very, very small. What I can afford to lose, it's what I'm willing to lose. And that's exactly what I recommend everyone else does. So if you have more questions, please come to our Discord. That's in the comments below. Look, knowledge is power in this game. We'll answer questions as much as possible in there. You can even DM me directly on Discord. I have lots of DM history of answering questions, and I'm happy to do it for you as well. I just want to give a huge shout out to all the people in the Discord that are giving me resources, passing me information. It really helps build these videos, and I look forward to your feedback on what you guys think. If you enjoy deep dive researching into topics across all spectrum, financial, politics, society, we'll be having a lot more of those kind of videos after this GMC AMC madness ends. So if you're feeling it, hit that subscribe button, hit a like. Helps me a lot, and I'll be more motivated to keep making these great videos. So thanks.